Imagine this. You're sitting at your desk one Tuesday morning, sipping your coffee, when a sheriff knocks on your door. He hands you a lawsuit you've been named personally. Now, what's the first thing the lawyer suing you will do? They'll run an asset search. They'll find real estate, brokerage accounts, bank accounts. Congratulations, you just painted a bullseye on your back. But what if they ran that name search and came up empty? Nothing. You're still wealthy, but you look broke on paper. And that's what today's video is about, making your assets invisible, not just hidden, but legally cloaked so that creditors and snoops have no idea what you own. I'm the business guy, the CEO of the Lawyers Limited law firm and asset protection planners. I've been in this field for 34 years and nearly 30 of those setting up Cook Islands trusts. In fact, we've set up more Cook Islands trusts than anyone else in the world. And today, I'm going to show you exactly how high net worth families and business owners keep their wealth invisible, even while lawsuits swirl around them. And before we dive in, make sure to subscribe to this channel. I put out videos every week showing you how to shield your assets from lawsuits, creditors, and ex-spouses. And trust me, these are strategies you don't want to miss. All right, let's go ahead and pull back the curtain. Why invisibility matters. So why bother making assets invisible? Well, let me give you two quick stories. Story number one, the quick shakedown. A business owner in Florida had a personal residence, kind of like one of these back here in Florida, and a brokerage account in his own name. Someone slipped and fell on his commercial property and sued him. Before the lawsuit even advanced, the opposing attorney pulled a public record search. They saw the house, the brokerage account, the whole picture. They filed a suit and then immediately pushed for a settlement, knowing this man had deep pockets. He paid, not because he was guilty, but because he looked wealthy and exposed. Story number two, the silent judgment. Another client had a judgment entered against him in New York. He never even knew he was sued. If they can't serve you, they can do this thing called alternative service or substituted service or service by publication by publishing the lawsuit in a newspaper you'll likely never read. So you don't even know. And by the time he found out, his bank accounts were frozen. Why? Because they were in his own name, tied to her Social Security number and easy to garnish. So here's the rule. Visibility invites attack. Invisibility creates doubt. If a lawyer can't see assets, they often won't file the case, and even if they do, collection becomes almost impossible. Okay, now here's how lawyers hunt for assets. Let's talk about mechanics. So how do lawyers and snoops actually track down assets? First of all, public property records. Every county recorder's office lists who owns what property, and if your name is there, congratulations, you're a target. Corporate filings, websites like Open Corporates make it easy to see what LLCs or corporations are tied to you. Bank and brokerage garnishment. If your name and Social Security number are tied to accounts, a judgment creditor can serve a writ of garnishment, and banks will freeze first, ask questions later. Skip tracers. For a couple $100, skip tracers will pull your financial life like an open book. In fact, I had a friend of mine, he owned a private detective agency, and he would pretend that he was the person calling the bank. He had their Social Security number, all their information, so whatever questions they asked at the bank, he knew what to say on the phone. He could get bank balances easily. So the key isn't to hide assets in a shady way. The key is to own nothing in your personal name. So you still control everything. That's where the structure we're about to cover comes in. Okay, bank accounts, the first line of attack. Your personal checking account usually is the easiest thing for a creditor to grab. If it's in your name, they freeze it. The solution? Privacy banking trust. So instead of titling your checking account in your own name, you place it in a revocable grantor trust, sometimes called a privacy trust, like the trust we set up for our clients all over the country. The trust gets its own EIN. You remain trustee and beneficiary, so no tax returns are required for the trust itself. You just do everything in your own name. And your checks can still say John Smith, but here's the kicker. When a creditor serves the bank with a writ, they're looking for accounts tied to your Social Security number. If your trust account isn't linked to your SSN, it doesn't pop up. Here's a case study, for example. We had a California client whose personal checking account was frozen after a car accident lawsuit. After we moved his account into a privacy trust, the next attempt to garnish came up blank. The attorney called us and said, "We can't find a dime." Exactly the point. Now, that's not a way to protect your assets. In discovery, they can still find these trusts, but it's more of a put on your seatbelt thing. Okay, savings and brokerage accounts, bigger targets. Savings and brokerage accounts are juicy targets. They don't create liability like rental property does. They just sit there, liquid, attractive. The solution? A Wyoming LLC, or better yet, an offshore LLC inside of an offshore trust, which we'll talk about later. Much greater protection. But let's first talk about a smaller level of protection. Why Wyoming? First of all, no public disclosure of members or managers. Charging order protection. Creditors can't easily seize assets inside, only wait for distributions, unless you get a rogue judge, because we see them penetrated unless they're put offshore, which you'll never make. But for now, we're talking about a lower level of protection. Low fees, strong statutes. Okay, so here's how it works. First of all, we set up a Wyoming LLC. We act as the organizer in the public records. The client gets the EIN and operating agreement. The client opens a brokerage account in the LLC's name. Now, the brokerage account belongs to, say, Silver Rock LLC, not John Smith. So run a name search, nothing shows. Cliffhanger. You might be asking, but won't the IRS see this? Hold that thought. I'll explain how tax reporting works in a few minutes. Okay, now your personal residence. Now, your home is both the most emotionally valuable asset and the most dangerous one to leave exposed. Option one, a residence trust if you have a mortgage. Drafted to preserve mortgage interest deductions, homestead exemptions, and capital gains exclusions. Uses a nominee trustee. We use Wyoming LLCs with nominees on the LLC. On record, it shows the LLC trustee. Privately, you're the beneficial owner of the trust or the beneficiary of the trust. So this keeps your name off of the public records. Option number two, Wyoming LLC if your home is paid off. Disregarded for tax purposes, it titles your home under the LLC, removing your name from the county records. Now, I might not do this in states that have huge homestead protection, but in states that don't, like New Jersey, here's an example. A New Jersey doctor who worked with us transferred his $3.2 million home into a residence trust. And a year later, a malpractice suit came in. The opposing lawyer ran property searches. Nothing was tied to his name, so they backed off. Okay, now let's talk about investment real estate. This is where invisibility and liability intersect. Rental property creates lawsuits, slip and falls, tenant disputes, all end up at your doorstep if not structured properly. Structure. Each rental is in its own LLC, state-specific, like Texas LLC for Texas property, for example. So all LLCs that you have are owned by a single Wyoming holding LLC. So if someone sues a tenant landlord LLC, they only get that property. They don't know you own 12 more properties through the Wyoming structure. Here's a case study. A landlord in Arizona had 18 rental properties. We structured each into a state LLC under one Wyoming holding company. Then when a tenant lawsuit came, the attorney thought they were suing a single property LLC with no cash. Therefore, they settled for nuisance value, never realizing the client had 17 other properties safely tucked away. Next, we recorded equity stripping mortgage against each property, payable preferentially to an offshore LLC inside of an offshore asset protection trust. So we can get third-party lenders to purchase that mortgage in the future if necessary and put the proceeds into your offshore trust, actually stripping all of the equity and putting the cash beyond the reach of creditors. Okay, now let's talk about your operating company. Businesses are magnets for lawsuits. Employees, vendors, competitors, they all sue. If your business is tied to your personal name, creditors can connect the dots. Instead, form an LLC or corporation, and if privacy is needed, have that LLC owned by another Wyoming LLC. Use nominee managers when appropriate. This way, your business reputation stays intact, but your personal ownership does not scream from public filings. We also use equity stripping with businesses using UCC1 liens, so there is nothing in the business to take. So we record a UCC1 lien against the operating company. But you get to keep the entire value of your business. And if this sounds complicated to a newbie, super simple for us, because that's what we do every day, and that's why people hire us to do these things. Okay, now here's the biggie: offshore cloaking, the ultimate invisibility. So far, we've talked about domestic invisibility, but here's where the elite take it offshore: the Cook Islands Trust and Cook Islands LLC combo. So the trust in the Cook Islands, that's a small island in the South Pacific, south of Hawaii. It's part of New Zealand, so it's one of the most trusted jurisdictions in the world. So you have an offshore trust here that holds a Cook Islands LLC. You're the manager of the Cook Islands LLC as long as the seas are calm. And when trouble hits, our licensed bonded trustee company law firm in the Cook Islands steps in. They are the most regulated trust jurisdiction in the world. I've been setting up trusts there for over 30 years, and we see nothing but absolute impeccable integrity. And U.S. courts have no jurisdiction there. This structure not only makes you invisible domestically, it makes you untouchable globally. Okay, here's a cliffhanger. How fast can a Cook Islands Trust protect you once you're sued? And we'll get to that in a few minutes. Okay, next, the psychology of lawsuits. This is a big deal here. So let's go ahead and step back. Lawsuits aren't just legal, they're also psychological. They get into your head. Attorneys are economic creatures. They ask, can I win? If I win, can I collect? If you look collectible, you'll get sued more. If you look broke, you're less attractive. It's like burglars casing a house. They go for the ones with open windows, not the fortresses with alarms and cameras. So our job is to make your financial life look like that fortress. Okay, now the IRS question. Remember that cliffhanger? Won't the IRS see this? And the answer is yes. The IRS always sees income. You're not hiding from the government. What you're doing is retitling ownership for legal purposes. Taxes flow through just like before, but creditors and snoops, they hit a wall. So think of it this way. The IRS is like the all-seeing eye. The creditors are like the tourists peeking through binoculars. We don't care if the IRS can see. That's fine. We want compliance. What we care about is blocking the snoops with binoculars. Okay, now real-world time frames. So here's that second cliffhanger. How fast can a Cook Islands Trust protect you? So in the Cook Islands, right away. The statute of limitations on fraudulent transfer claims is 1 to 2 years, but we've never seen an opponent win. Compare that to the U.S., where it could be 4 to 10 years. Translation: once assets are inside the Cook Islands Trust and LLC, a creditor's window to challenge is tiny. So many give up because the math simply doesn't work. Okay, now here's a case study, the entrepreneur's divorce. One of my favorite examples. An entrepreneur came to us during a contentious divorce. His ex-wife's attorney was gearing up to freeze accounts. We placed his brokerage and savings account inside of a Cook Islands LLC owned by a Cook Islands Trust. So when the freeze attempt came, the U.S. courts had no jurisdiction. The ex-wife's lawyer eventually told her, there's nothing we can do, settle. So this wasn't about hiding, it was about legally shifting ownership outside the U.S. jurisdiction. Okay, next up, when invisibility backfires if you DIY wrong. Quick warning, I've seen people try to do this themselves with cheap online forms, and mistakes include this: using quitclaim deeds instead of warranty deeds, tip off for snoops; setting up New Mexico LLCs, which are weak charging order protection; forgetting to draft residential trust to preserve the homestead exemptions. Big, huge mistake. Bottom line, one wrong step and you've left a breadcrumb trail for creditors. Okay, in closing, let's talk about building your cloak. Let's go ahead and recap. Checking account, where does that go? Remember, privacy trust. Savings and brokerage accounts, Wyoming LLC, or better yet, Offshore LLC inside of a trust. Personal residence, residence trust, or Wyoming LLC in some cases. Rentals, individual LLCs under a Wyoming holding LLC. Businesses, with layered privacy and UCC1 lien filings. Global Shield is the Cook Islands Trust plus LLC. So if you have $500,000 or more in assets, the Cook Islands Trust plus LLC is your go-to in most cases. So the bottom line is, with these tools, you don't look like the wealthy target that you are. You look invisible. And invisible people don't get sued as much. Or if they do, creditors can't collect. So if you're serious about protecting your wealth, feel free to visit us at assetprotectionplanners.com. You get a whole lot of free information there. That's my firm. We've been protecting clients for decades, and we've set up more Cook Islands trusts than anybody else in the world. And hey, if you found this valuable, hit the subscribe button right now. Every week, I release deep dive strategies to protect your wealth, because here's the truth. One lawsuit can wipe you out, but invisibility can make you untouchable.